Hello everyone and welcome to Day Trader S&P 500. Today is Tuesday, February 13th, 2024. It's been a long day. We were busy preparing for the Elliott Wave Hub. Thank you for all you who joined in the room. It was a lot of fun. We were able to actually get a trade in 2 minutes before the market opened. Caught that CPI. Had a 5-minute trade because I was busy with the hub, and very profitable one to say the least. So it was nice to get in and out and then get back in. We're busy today doing 3 reports. We did one for our annual subs, our monthly, and our NQ subscribers. We will get into that. Show you guys real quick here the NQ. Okay, we had a target here of 18,121. It hit 18,128. So within 7 points, that's close enough for a direct hit. We're counting a completed 5-wave rise from the October 2022 low, as you can see it there in blue. Okay, so now we need to retrace that. Here are the retracement targets. You can see the 15,204 is the 382, the 14,330 is the 500. And the let me fix this so it lines up. Let me get in here and move that 500 up. There we go. Okay, the 618 is 13,402 and the 786 is, clean that up, 12,119. As long as that high of 18,121 holds, that's what we're expecting there. And there's the area of the 4th wave of one lesser degree of trend, and we could expect to see it run in there. That's right in between the 382 and the 500. That should be a normal retracement for that 5-wave rise. I want to get into the US10yr. We had some exciting action on that today. Okay, we'll let me see if I can make that there we go. Put that trigger down there, that trigger down there. You guys know all about that trigger and target over here with the wave 1 high in October of 22. Wave 2 low, 1, 2, 3, 4, 5. 3 trigger right here gave us the 5 target, which was a direct hit to within 2/100ths of a point. Okay, and we've got this ABC down. We're calling this wave 2. You can see that retracement ended up right between the, there we go, the 618 and the 786 at 3.783%. So we had that down here. We counted, you can see 5 waves up in red. I need to make those so they don't, 4 does not overlap 1. Okay, those 5 waves up in red represent the larger degree wave 1 in purple. We had a wave 2 down. The move above, today's move above, or was it yesterday? It was today's move above the wave 1 high. Validated this count. This 2 should be complete. We shouldn't have to worry about it going down to the 786 or even going down to the 3.253% to negate the entire wave 1 up. So we feel comfortable with that. The next trigger is this wave A low, which is 4.363%, and we're getting close to that. Okay, so once that A wave low is surpassed to the upside, that activates this upside trigger. We have another one here. If I can scroll down, okay, you see that first trigger is the 5.551. okay, that's where this wave 3 up equals this wave 1. Okay, we got the 1 up, 2 down, 3. At the larger degree of trend, going back to this 1 in Roman numerals and this wave 2 in Roman numerals, wave 3 up here is equal to 1 at 7.255%, and that will be triggered with the move above here. That target will be triggered. It's all about triggers and targets. People are liking them. They're working really well. So we're going to stay with them. Okay, so we're looking for this trigger to pull that mark and that target, and then this trigger to pull that target, okay, which is up here. Okay, we'll see how this shakes out. This is just beginning, this 3rd wave. And let's just see while we're here, let's just get an extension here to see where this should go. I don't know if I'll get this to the 100th of a point, but I'll do my best. At 2 down there. Yeah, that's a 4.484 for the 1.618. The 1.414 is at 4.399. So that should activate that trigger there, and eventually we'll get up here above the 5.021%. Okay, so exciting stuff in the US 10-year. Okay, let's get into the S&P 500. Let me make this full screen because there's a lot going on in this chart. But if you look at the blue wave count here, we've got a 1 up, a 2 down, 3 up, a 4 down, 5 up. There were our targets there. Came pretty darn close. I wouldn't call that a direct hit, but good enough. Okay, we had a 50.88 target, hit 50.48. Interesting thing here is, let me count it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 open gaps. We closed 3 of them within today or the last 2 days. Okay, so we can count this 5 waves up from the October 2022 low into yesterday's high. There's our retrace targets, the 382 at 44.53, the 50% at 42.69, the 618 at 40.86, and the 786 is down here at 38.24. We will see where this goes. Here's that area of the previous 4th wave, and that falls pretty much again within, this one's between the 382 and the 618. So we'll see where this goes. Okay, that's the S&P cash. Let's get into the ES. I don't know if we want to do the, let's look at the daily first. This is a rinse and repeat, same thing here. Okay, let me line these things up here. Okay, you can see our last 2 triggers are both upside. This one from 1030 was activated off of that 1027 low, so 3 days after we had an upside trigger. It has an 863 point gain at $50 a point. You can do the math. That's pretty darn good. And the other one was at 48.41.50. That trigger has produced a 207 point gain up to that 50.66.50 high. All right, the next trigger to the downside is over here at 40.38, and the one after that is down here at 42.07. Okay, so we got a completed 5-wave rise from the October 2022 low, or the WXY pattern complete. Either way, the market needs to retrace this rise. You can see our targets here are 45.99 and a quarter, 44.50 even, and 43.10.75. That's on the ES daily chart. Let's move over to the hourly chart, and here's where we're looking at. There's that 212 high. Breaking this down, we've got a 1 down, a 2 up. 3rd wave subdividing in a 1, 2, 3, 4, 5 for 3. There's the 4th wave targets. I think I can show those more clear on the report. That's what we're looking at there. A 4 up, followed by a 5 down. Let me see if I can, we should get a 4 up here. Okay, and that's right at the 382 right now. And that should be followed by a 5th wave down. And let's make that red. Red is down and black is up. There we go. Maybe a little pink, but yeah, we'll leave it. Okay, so this could obviously go up to the 50% of 618. Okay, but it's right at the 382 right now, and then we'll get a 5 down. We'll be able to calculate that target once this 4 up is done. We'll put that out for our monthly subscribers who get a report every day, sometimes more than once a day. Okay, speaking of those reports, let's get into the NQ. That's put out once a week. You can see that's our today's report. Okay, there was our target. There was the actual within 7 points, and you can see here's a clean look at it right here. Okay, 5-wave completed pattern up. There's the retracements down. All right, let's go from that to our special interim report, which covers the S&P 500 cash, among a lot of other things. It goes to our annual subscribers, and you can see here possible change in trend. Again, there's those 14 open gaps, 3 of which have been closed. There's our retracement targets here for this 5-wave advance from the October 2022 low to the high on yesterday, 212. Retracement targets are 44.53, 42.69, 4086, and 3824. Okay, we'll see how that plays out. Okay, and then let's look at our that was our special interim report. So let's get to the market close for the monthly subscribers who get reports every day, sometimes more than once a day. All right, there's that possible change in trend. We're looking for 5 waves down, followed by 3 waves up to a lower high, followed by 5 waves down to a lower low. I can show that down there. I told you guys we'd show you these retracement targets in the picture here. Right next to the 382, the 500 at 49.88 and a quarter, and the 618 at 5,000.50. Let me see if I have those. Okay, 5 waves down unfolding. There we go. Initial signal for a change in trend, 5 down, followed by 3 up to a lower high, followed by 5 down to a lower low. And then we need to see any rise from that low, remain below the first wave low, and another 5-wave decline below the 3rd wave low. We've been looking for months for that. Looks promising. We still don't have validation, but it's pretty darn close. It's a good signal if this 3rd wave is a 2.618. That's a good signal that the trend is to the downside. Usually these 3rd waves will do a 1 or a 1.618, but a 2.618 is a good indication that the trend is down. We'll have to watch it play out over the next several days and see if we actually get the 100% confirmation of a change in trend. I'll leave you guys with this chart here. Glad to get you guys caught up. Again, thank you for everyone who attended the Elliott Wave Hub. It was very exciting. A lot of exciting speakers and free gifts from everyone, including yours truly. Okay, that's it for this time, and until next time, take care, everyone.